Assalamualaikum and hi, my name is Nur Afina binti Basirin, number matric 297293. Today we are going to review the case study titled Big Data Analytical Implementation issued by Siu and Farouk 2024. The focus is on Bank X, a conventional institution in Malaysia that is struggling to keep up with the disruptive fintech competitors. To sustain its market leadership, the bank must embrace Big Data Analytical or BDA. However, the case highlights a major hurdle. Bank X operates across 10 Asian countries but relies on inefficient 40-years-old legacy system. The systems are not linked, created closed data silos that waste valuable customer information. The central conflict in the article is between the IT team who insists that cloud-based services are the solution and the CEO Ahmad who prioritizes security and resists the cloud. Our report analyzes this challenge, adopting the viewpoint of a senior IT manager to explore the solution. Moving to the first question, how does Big Data Analytical positively and negatively affect the customer? The case suggests that BDA fundamentally suggests the bank customer relationship. On the positive side, the primary benefit is personalization. Instead of spam-like marketing, BDA allows the bank to analyze spending patterns. For example, the author notes that the bank ads could identify frequent travelers and offer them relevant products like a platinum travel card. Another major plus is financial inclusion. By analyzing non-traditional data like utility bills, bank ads can grant loans to people with no credit history, giving them access to funds for housing or business. However, there are serious negative risks. The first is privacy. To function, the analytical requires massive amount of data, including social media activity. Customers may feel the bank is intruding on their private life just to determine credibility. The second negative is unfair treatment. The case emphasizes that bank ads suffer from data quality problem due to its legacy system. If an algorithm makes a judgment based on this flawed data, a customer could be unfairly rejected for a loan. Unlike a human manager, the customer offers no chance for explanation, leading to frustration.
Doctor, my name is Sumati Parmaslo. My matrix number is 296723. So today I will present about the benefit cloud computing offer for big data analytics. So cloud computing helps bank X to save money by avoiding larger investment in physical servers and IT infrastructure. So for example, with pay-as-you-go model, the bank only pay for what it uses. Therefore, this reduces the fixed costs and allows banks to focus its money on innovation and strategic projects. Next benefit is scalability and flexibility. Cloud platform let bank X easily increase or decrease resources based on demand. This ensures smooth performance during busy period and avoid wasting resources when demand is low, especially when handling data across Asia. Cloud computing also significantly enhances collaboration and accessibility for big data analytics. The Bank X team can access data and analytical tools from any location with internet connection. This makes it possible for IT analysis, employees and business units throughout the Malaysia and Asian sector to collaborate on the same data at same time. And lastly, cloud computing allows Bank X to use analytical tools and technologies without the need to invest in expensive hardware or software. Cloud companies are continuously updating their system with innovations such as AI, machine learning, and real-time data processing. Therefore, Bank X can fastly implement high-performance analytical workflow and stay updated of the continuous changing digital ecosystem. Overall, having access to cloud-based solutions speed up the big data activities and lower IT's overhead.
Assalamualaikum and good day to my lecturer and fellow friends. My name is Nur Ashrafani Zulkifli and my matric number is 297347. Today, I will discuss whether I agree with Ahmad, the CEO of Bank X, regarding the adoption of cloud-based services and the risks involved. I agree with Ahmad's cautious approach because although cloud computing offers benefits such as scalability and system integration, the banking industry is highly regulated and rate sensitive. For a commercial bank like Bank X, security and regulatory compliance must always come before technological convenience. The first and foremost criteria is data security and customer privacy. Banks handle highly sensitive information such as customer identities, account balances, transaction histories, and credit records. When this data is moved to a cloud-based environment, it is managed by third-party service providers rather than the bank itself. If the cloud provider experiences a data breach or cyber attack, bank's confidential information might be exposed. This could lead to a severe reputational damage, legal consequences, and a loss of customer trust. Since trust is the foundation of banking, even a single major security incident could have a long-term negative effect on the bank. The second risk is the loss of direct control over the bank IT infrastructure. Bank X no longer has full physical and operational control over its servers and systems, as they are hosted in external data centers. This makes it more difficult for the bank to enforce strict internal security policies, monitor system access, and respond immediately to security incidents. The reduced control also increases the bank's exposure to cyber threats and limits its ability to customize security measures according to its own risk management standard. The third risk involves regulatory compliance and data sovereignty. Banks operate under strict regulations set by Bank Negara Malaysia, particularly regarding where financial data is stored and processed. Most public cloud providers store and replicate data across multiple countries to improve performance and reliability. If a bank X data is stored outside Malaysia, this could result in non-compliance with regulatory requirements, delay in approval, regulatory penalties, or even restriction on banking operation. The fourth risk is operational and service availability risk. Cloud-based systems depend heavily on internet connectivity and the stability of the cloud provider's infrastructure. If there is a system outage, cyber incident, or a network failure at the cloud provider level, Bank X may lose access to its critical system. This could disrupt banking operations across all Asian markets simultaneously. In comparison, although legacy systems are outdated, they are highly stable and reliable for essential banking functions. In conclusion, Ahmad's concerns are well founded. While cloud computing can help reduce data silos and improve efficiency, the associated security, regulatory, and operational risks are too significant to ignore. Therefore, a hybrid cloud or private cloud approach would be more appropriate for Bank X. This allows the bank to benefit from cloud technology while maintaining control, regulatory compliance, and customer trust. That's all from me. Thank you.
The alternative solutions that Bank X can adopt to address the challenges caused by its legacy system and the complex working environment without relying on the cloud-based service, which is what they can do. First, one effective solutions is the implementations of an premise enterprise data integration platform, which is it's also known as the middleware layer. This is include technology such as enterprise service bus, data visualization tools, and master data management system. These two act as a central integrations layer that connect Bank X's various legacy systems. By standardizing data formats, managing data flow between departments, and also clean, accurate record, the middleware layer ensures the data is consistent, accurate, and ready for analytics. As a result, Bank X analytic model can operate more effective, improving the decisions making while also reducing long-term operational costs. Importantly, this on-premise approach also addresses the CEO concern regarding the cloud security. Since all sensitive customer and the financial data remains within Bank X internal data center, the bank retains full control over the data governance, security standards, and regulatory compliance. This is especially critical in meeting the Bank Negara Malaysia's strict regulatory requirement. In addition, A standardized integrations platform helps simplify the Bank Act's complicated workflow, which is the currently delay occur due to the multiple approved layers, disconnected data operations, and late system installation. By reducing manual data preparations and improving the system consistency, analytical model can move from research to productions faster and more reliably. Another alternative solution is a phased legacy system modernization strategy. Instead of replacing system all at once, Bank Act can gradually upgrade older components, rewrite outdated models, and convert legacy data formats into a modern standards. Overall, these on-premise solutions allow the Bank Acts to improve data quality, system integrations, and the operational efficiency, all while maintaining full control over the security and the compliance. That's all from me. Thank you.
The first point is trustworthy analytic. Actually, the foundation, the main goal of having trustworthy analytic is to make sure that the information the bank use to make decision actually matches what is happening in real world. So when data is high quality and honest, it helps the bank to avoid making mistakes based on personal guesses or accidental biases. So it leads to much fairer and more objective choices. So by focusing on this foundation, the bank can turn messy, raw information into a powerful tool that helps everyone work faster and efficient, as well as makes the business perform better. The second point is to eliminate data conflict. Ensuring consistency data conflicts happen when different computer system or department shows different information for the same thing, which creates a lot of confusion about which version is the truth. So to fix this, the bank must make sure all its systems are talking to each other or communicate each other perfectly so that the numbers say exactly the same whether you are looking at a simple report or a giant database. In a business, especially important for connecting the old traditional legacy or the old traditional system with the newer or modern data warehouses used today. The last point is to accurately analysis. So the completeness and the precision to get an accurate analysis, Bank X needs a data set that is both correct and has no missing pieces, because having gaps in information is risky as having the wrong information. So if a piece of data is missing, it creates a blind spot where a bank might make a bad decision because they don't have the full story about a customer. Bank can carefully assess every detail to see if the customer is actually able to pay back the loan before they officially approve it. As for the conclusion, the strategic impact and future readiness using a big data analytic has completely changed how the bank works by making it much easier to assess customer, whether the customer can pay back the loan, creating banking services that feel personal to individual, as well as making the daily accounting tasks smoother. Even though the bank has a 40-year history of merging different companies together, which usually makes things very complicated, using these advanced data tools will help turn the Bank X into a single, unified business that focuses entirely on the needs of its customers. And finally, by making sure all data follows the same clear format and keeping the information clean and organized, Bank X is breaking through the old barriers that used to hold it back. So these steps are the final keys to make sure that the bank can grow steadily and stay successful for many more years to come.